Good afternoon, traders. It is April 7th, Good Friday. No trading today. Did you guys check out the non-farm payrolls this morning? Had a nice bump up, did we not? Yeah. Okay, so yesterday I'm going to show you some tweets that I say there's some mixed signals going on here. I'm seeing some bullish, but I see some bearish divergences, as you're seeing right here in this tweet. The 5-minute chart did have bearish divergence, and you'll see that more in the intraday tweeting. But yet the 65-minute had a positive cross above the zero line. That's bullish. But yet the 1 week shows a doji pattern. You'll see that also. Gaps galore unfilled from the previous week. How does that make for a horror film, where you never quite know if the bad guy is dead or not? But I also tweeted yesterday, you know what? This is deceptively strong. I will admit, the 65-minute confirmed the MACD is above the zero line and separated from the signal line right here. The 5-minute MACD could slowly inch to the zero line without the price collapsing, and that resets bearish divergence. That's what happened, guys. That's what ended up happening. Next week, and mind you, I said this yesterday before non-farm payrolls this morning. Next week could continue to surprise to the upside, shocking everyone. Yep. Okay. I'm showing this. This was late in the afternoon. This would have been 1:58 Eastern time. So 2 p.m. A couple hours left to go. I scaled out of my calls right there. Mind you, I got calls right here, right around here. And I scaled out right around here. So basically neutral, no gain, whatever. Something's a little off when I tweeted that. I said, something's not quite right. I'm just going to sit here and watch. Okay? Something's off because a new 65-minute candle started. But in hindsight, when I said something was a little off, it's because a high for the day was already nearby. Yep. A new 65-minute candle should have had more lift. And when it didn't lift much, that's what I meant when I said something was off. You gotta go with your gut. So, what's going on here? Why are you still just kind of messing around down here? You should have taken off already. You've already consolidated 5, 10, 15, 20 minutes down. Why are you still like kind of hurting to go up? Okay? So, as we know, that's what happened. This is what happened this morning. This is futures 1 hour. Non-farm payrolls came out. Pop. First of all, the MACD was already above the zero line, and now it's popping and separating. Oops. We're not going lower, guys. Oops. The fact that it was already above the zero line all night. Look at that. That shows you that it's above the 1 hour EMA 50 correspondingly. It was positioning itself to go up, guys. Already. Oh. Tisk, tisk, tisk. You 1 percentile perma bears with all your trash talk. The bull market's over. We're going down. Yes. Your puts shall burn. They shall burn. Thankfully. Okay, so 65-minute, 1 hour chart. Kind of saw that earlier in that tweet. Here it is. Separation above the zero line. Concluding this down, the downtrend from a couple days ago. From up here, remember that? Down. Oh, we're going back up. That was a shallow pullback. Shallow pullback. So, yep. That's the way it's going to be. 65-minute. Let's check out the daily. Here's your once a week daily review for me, since I never look at the daily during the weekday. Yeah. So, I'm going to remind you bears who kept thinking we're going down, we're going down. This is the week of the this is the Silicon Valley Bank right here. Remember that? Oh, yeah, Credit Suisse. Oh, we're going to crash. Oh, no, maybe not. In fact, we are higher now than when the Silicon Valley Bank Credit Suisse planned fiasco, I'm going to add, the planned and synchronized fake crash fall duped all of you bears. And I told you this. This was planned. I have the screenshot of the exact intraday 4-hour pattern that was perfectly timed to dump this thing. And they planned all along to go exactly to what I called out the Friday before it actually happened. SPY 383, it's going to bounce off of this line as it has since the October 13th bear market bottom. Bear market bottom. That is the bottom. And what have we done since then? Boom! To even higher than the Credit Suisse fiasco. Here. That doesn't look like that's going to crash to me. What do you think? And I'm going to remind you again, for those of you who have selective memory, it took 4 months from the June 17th low to the October 13th low. 4 months to make a lower low. We are now 1 week shy of 6 months. 1 week shy of 6 months from the October 13th low, and we're making higher highs, higher lows, and we're about to make a new high up here. Yes, we are going to make a new high. Up here. You see that blue line? Guess what that is? 421. That intersects with the green line that goes back to the October 19th gap. You 1 percentile bears, you sit there, you talk all your trash, you have no earthly idea what you're even saying. And, well, let's see here. Okay, so, no, this is the daily. So, that's all I need to say about that. Let's go to the weekly. Here's your doji that I was talking about. I'll show that to you. I'll rub that in you 1 percentile bears' faces in a second. For now, this is the doji. How you like that? Why are we in buy the dip mode? Because, and I've told you this before, in last Friday's episode, go back to 2019 if you want to compare 2023 to any year in the past. You can't go back to 2022. You can't go back to 2020. You can't go back to 2008. You can't go back to 2000. You can't go back to 1979. You can't go back to 1929. You have to go back to 2019. Because the October 13th low traces back to Q4 2019. That's why. The MACD, the weekly MACD, is above the zero line. Any time it is a mathematical certainty you are above the zero line and you're curling up, you are in buy the dip mode, because that is a bull market. Full stop. For those of you who are hard of hearing, look at 2022 here, when the MACD, the weekly MACD, was below the zero line, way below the zero line. That's why that's not a buy the dip mode then. That's falling, that's crashing mode. But now look where we are. Above zero and curling back up again. You are in buy the dip mode, as you painfully saw this week if you got puts. And yes, I'm going to rub this in your faces again. February 4th, I sent out this tweet. I'm still not going to show you that secret pattern. But I'll tell you what I'm going to tell you. How about that? SPY 390 to 400 has held. And has it not only has it held, we are going back up. What am I going to tell you guys? Well, you bears. The secret pattern that I have seen since February 4th. Actually, I saw it earlier than that. I just tweeted on it on February 4th. When, not if, when we hit SPY 421 and fill that August 19th gap, that, by the way, makes a higher high than the February high. I published this back on January 29th. When we hit SPY 421, then I will reveal that pattern that has duped all of you bears. And I actually recently just caught wind. I did not substantiate this because I don't watch his videos. I heard the Maverick of Wall Street isn't posting videos anymore. I didn't look, though. I used to watch him back in like November, December, but I kind of stopped. I heard he's not posting videos anymore because he knows the bear market's over. He knows his narrative is now obsolete, negated. I've known all of this since December, guys. December that it was over. Too bad. All you bears are getting zeroed out. Oh, let's talk about the VIX. Let's talk about the VIX. Weekly chart VIX. Uh-oh, look right there, look right there. Negative cross, negative cross. Oh no. And you're below the zero line. Look how far below the weekly MACD zero line you are, and it's a negative cross now. That's a double whammy. VIX is going at the very least to 17, if not lower. 16s, perhaps. At the very least, you're going down to 17. And once again, I've been saying this since when? December. Go back and look at my episodes. Oh, let's look at the monthly chart, shall we? Oh, no. Oh. Ooh. Not only do you have separation, not only do you have separation from the zero line, you also are curling down further. Look at the RSI. Lower lows, lower lows. Now that's going lower. Yep. You don't see this pattern in a bear market. You see it in a bull market. Dixie, oh no. You have the same fate as the VIX. Look at you. This is the weekly? Yes. Look at this. Oh, curling down. Oh no. It's curling down. Look at that. You gonna tell me you gonna go back up? No. The market knows it's over. It's over for the dollar. It's just a matter of, it's just trying its almighty to stay up above this pink trend line right here. This is the regression line. It's going to fall, guys. It's going to fall. You don't have momentum. You don't have it. All of the same themes that I always preach about the EMA 50, about how far you are below the MACD zero line. I preach this over and over and over for any security. This also applies to SPY. You're too far below the zero line. You're not going back up. You're too far below. You're not just going to curl up and reverse. That applies to the VIX. that applies to the dollar, that applies to SPY, that applies to all of my everyday intraday trading principles. I practice these principles repeatedly every single day. I call them out in my tweets. I'm just applying them to larger time frames. They apply to larger time frames. So here's the dollar monthly. Oh no, oh no. Separating even more from the signal line. Oh no. That's not a good look. That's not a good look. Hold on just a second. I need to turn something off that I know. Here we go. Okay. Yeah. What else do you want me to say, guys? I've been saying this all along. Look at that separation on the monthly. This is on the monthly. Oh, no. It is not going to go doop, doop. No, it is not. I said this maybe it's about a month and a half, 2 months ago now. I kind of lost count. 100%. Dixie will not reclaim the EMA, the weekly EMA 50 at 104. 100% it will not do it. Where are we at now? 102. It's going to keep going down. So don't get your hopes up that Dixie's going to make a miraculous comeback. It doesn't have momentum. It never has. It lost it. 2 months ago, 3 months ago, it lost it. XLF, daily chart. Let's look closely here. XLF. Here, there's the bottom. This is the staged SVB and Credit Suisse. That's the bottom. Up, SMA 20. Sound familiar? Didn't get rejected by SMA 20. What's it doing now? It's coming up, and now it's bouncing off SMA 20. Ha ha ha. Where's it going? It's going back to EMA 50. Does that sound familiar? It should. If you follow me on Twitter and if you follow my episodes, I always talk about, let's see how it interacts with SMA 20. Let's see if SMA 20 rejects it or not. This doesn't look like a rejection to me, does it? This is not a wick down and then down. No, it's up, consolidate, up. Daily chart separated from the signal line. That's a positive cross. Heading back to the zero line. Look at that. That's the financial district, guys. You can't point to even 2008. We're not crashing in April. Your chance came in March. And what did March do? March created a higher low to SPY 383. March didn't crash. It made a higher low. It's over. You guys want to invoke 2008. You want to compare chart patterns, head and shoulders, all that stuff from previous years. Who cares about previous years? It has nothing to do with the financials of 2023. There wasn't 8.4 trillion in the system in all those previous years. But in 2019, guess what? There was 5 trillion in the system. Oh, I'm sorry, there's 4 trillion in the system as of Q4 2019. Because the Fed injected 5 trillion from 2020 through 2021. 5 trillion. So 2019 is your only year you can most reliably compare to, both from a balance sheet perspective and from a MACD perspective. All other earlier years do not apply. Yep. That is just the way it goes. SPY, here it is. 5-minute chart. yesterday. This was the action. Yes, it went down, then it went up. As soon as I saw this, I was like, "Oh man, this is this." I saw this in the before opening bell. I'm like, "Oh, you'll see. You'll see me tweet." I'm like, "You know what? I'm gonna nibble along." This I knew was staged. This was to make you bears say, "Oh, see, going down. See, look at see, look at this. Oh." It's like, no. This is not going down. So, let's get into it. 65-minute chart. It's trying to bottom before opening bell. Oh, I probably sent this out like a minute or so. Well, whatever. Market. The MACD is trying to finish off the higher low notch on the 65-minute chart. It's kind of hard to see. And it's kind of flattish, but here it is. Down, up, down. See? It's trying to carve out the higher low notch. And that's what it did when the markets went down all morning. See, I know what the market maker's game is. I see your game. You think you're nickel slick, but I got your petty change. I got it. So, ooh, it's kind of blocking the view. Oops. Yeah, it is kind of blocking the view because I wish it would have showed this better right here. Kind of the tweets are blocking this down swing right here. So, it could be a classic reclaim from underneath. We'll wait for the next few candles. So, here's that channel right here. So, this channel applies to this channel right here. So, it did go down underneath, and then it came back up. Could be a classic reclaim from underneath. Yes, sir. Yes, sir. We'll wait for the next few candles. So, I'm continuing to wait. I'm just going to wait. I'm going to wait. Give it a few more. It's coming down to right around here-ish. Something like that. That you can't see. It's kind of blocked off. Okay. Guess what? Right here. Nibble along. I knew it. I was like, that's the bottom. That's the bottom. Okay. I will scale more calls when it clears the red channel, 40650. That would have been right here. When it clears it, I'm going to scale long. We all know what happened. Scale long, baby. Okay? So, what it did, here's where, as soon as it did this, I'm like, oh man, see, this fact alone, this right here, would have been equivalent to all this right here. Now you could see the same thing I saw on the screen. You came up here, didn't get rejected by the channel. That tells me, yeah, you're going under the channel. And I've talked about this in all my previous episodes. You're going under the channel again. You came back up, you didn't even get rejected and went down. I was like, I knew it. This was all just a scheme. You came back up, came back and touched the EMA 50, right? So now we know we ended up consolidating down, up, right? So, sandwiched between EMA 50, SMA 20, and the channel. EMA 50, SMA 20, and the channel. Look at that. Up, down, getting some support. See, look at this. Wick up, wick up, wick up. That's hidden strength. I've talked about this in previous episodes as well. That's hidden strength. So, then why, some of you may ask, well, then why did it go down? That always makes that move. It always makes a final down move before an up move. It makes the final down move, completes the higher low here and here. But this is classic hidden bullishness because it makes a final down move, consolidates under SMA 20 and the channel line. That's bullish, guys. And was it bullish? You're damn right it was. And I call it out here. Oh, this is classic. This is a classic old school pattern. Classic. For once, market maker finally went old school. He went classic mode. Okay. Scaling more long. Right here. Went long here. Went long here. Went long here. I was like, oh yeah. Previous 40710 taken. So this is another classic telltale sign. This, or was it here? Up, up. Yeah. This candle was higher than this. Yeah, you can see it right here. So, oh, actually, I'm referring to this. So, basically, you can compare, for example, this candle with the last green candle high, which is this one right here. See that? Higher high. You're going up. Okay. The above the EMA 50 and the MACD is above zero line. Yeah, right here. Above the EMA 50, right here, above EMA 50, and MACD is above the zero line. Yep. In 2 minutes, the new 65-minute candle opens and it will lock in. It will lock in a positive cross on the 65-minute MACD. That would have been, yeah, right. Well, this is the 5-minute chart, but I'm referencing the 65-minute candle, 65-minute chart that I don't show. So it basically, when that 65-minute candle closes, that locks in the MACD positioning. I'm just pointing to this as a hypothetical example. It locks in the MACD positioning, above. It's a positive cross. Positive cross means positive cross from the signal line here. See that? Here's the signal line. It locks in that spot. I'm just going to make up a point like right here. It locks it in right there. Boom, it's pegged. It's locked in. Your rate is locked in. You're not changing it. It's not going back either. That locks it in. That also locks in the momentum. Just like now you have confirmed momentum. It will not curl down. Because we're talking about the 65-minute, guys. We're not talking about the 5-minute. The 5-minute can curl down, obviously, right? It almost instantly. The 65-minute can't just curl down like that. Not instantly. Okay? So, there you have it. Okay. When it got up here, right here, I scalped out. I said, you know what, man? That's good enough. It's good enough. I will re-enter if it can break past 408.60, which was this black line right here. Okay? Well, as we now know, 2020, it did. Hindsight is 2020. It did break past 408.60. Now, yeah, here we go. I was referring to this bad boy right here. Yeah. In 5 minutes, a new 65-minute candle opens. I will wait on that candle. I want to see the back test to 408. Yeah, here's the back test. That's the back test that wasn't quite happening quite yet, but it happened here. Okay. So, oh well, yeah, it's still back tested right here. So at the time it was red, red. It ended up going red, green. It ended up doing that. Okay. So again, I was just watching, just to see. I want to see. Were you just messing around, or are you actually gonna retake that channel? 408.50, the black line right here. Okay. So, okay, what I was talking about here, if it cannot touch 408.50, meaning it did go under. It did go under. That's what this wick was. Remember, before it becomes a wick, it's a candle body. So it did go under. So I was like, ooh, here we go. Here we go. So this was a red candle at one time, right? It was. Here's the beginning of the red candle. It was a red candle. I'm like, ooh. But I wanted to wait for the next candle. Meaning, if the next candle that forms, let's just say it was under. Turns out it did turn up to be a green candle by the time the 5th minute came to close out the candle. But let's just say it was still a red candle, even after 5 minutes, and that this red candle right here closed red. If the next candle that opens, that would have been right here, doesn't even touch this black 408.50 line, oh, that's bad. That's when you go short. That's when you go short. But as history shall write, yesterday's book, it turned green and it went up. Okay? But that's what I'm referring to. I said, if it can't touch 408.50, that would have, I was playing out a hypothetical, meaning this is red, and the next candle that forms is also red underneath 408.50. Okay? So I hope that's clear. Okay, so far so good, but, okay, see that? I'm referencing this right here. I'm talking about this right here. But I want to see more lift before scaling long. So I didn't scale long yet. Okay, but I do here. Yeah, I said, oh, okay, all right. I see you got some pump. Okay, so I got in, you know, right here. Okay. Okay, do I still have that pink line? Yes, I do. So this pink line is referencing a couple days ago, 4-4. It is an intraday high. It's not the high. It's not the high for the day, but it is an afternoon intraday high. Afternoon, not overall for the day, but an afternoon high. And so that's what I'm kind of looking for. You got to look left. Look left. It's like, what highs are you taking out? To give me an idea, are you going to go higher, right? So this is higher than this, obviously. So yes, you are going to go higher, and that is higher than this. See, you're going higher. So, yeah, but not the high. Okay. All right, here we go. Here we go. We are talking about right. We're talking about right here. Right here. When I sent that tweet out, right here. It's waiting the next 6 minutes for the new 65 candle to open. A move will come at that time. Okay. So at this time, so the new 65-minute candle would have opened right here, right in this range. Okay. So turns out when it kept just like staying flat, see that? When the new 65-minute candle opened, it was like up, oh, wick down, down, doji, up, wick down. I'm like, I'm not a fan of this. I expect to see something a little bit more than that. Okay? That's when I got out. I was like, nope. That's when I got out. Bought calls a little bit earlier. I said, yeah, you know what? I'm out. I'm out. So, obviously hindsight is 2020. We just went a little bit higher right there, and then we went down. See, so, So at least my calls didn't get trapped because I bailed out. Okay. So when it did end up going up, so this is the up move here. Here's the final up move right here, right there. See that? That would have been right here. Right here. There's now, okay, so check this out. So this is obviously higher than this, is higher than this, is higher than that, right? It's going up, the price. Look at the MACD, guys. Going down. It's like, uh-oh, I'm calling this out. Bearish divergence. Be careful. Y'all need to be careful. But I also added a bearish divergence can be negated only if there's a MACD positive cross makes a higher high. Here I'm drawing out the arrow. It has to do this higher than that. It can be negated. But as we know, what ended up happening, oh no, it went down, which is consistent with the bearish divergence that preceded the downward move, right? There you go. There's bearish divergence, and it went down. See? So, there you have it. Yep, be careful. Here we go. I'm actually calling it right, right here. I sent out that tweet and said, yep, be careful. MACD's curling down now. The price is starting to falter. Be careful. You need to get out of your puts. Okay? So looking back, it's just been in a tight range for the last 2.5 hours. Right here. See that? Here's the blue bar up there, an upper range. Blue bar, lower range. It's just been in a range. I never did scale back in after, even when it started to look like, oh, it's taking off again. Nah, I'm just gonna watch this. Upside is limited at this point. Yes, it was. Combined with bearish divergence. Yes, it was. I'm like, nah. I'm done. No more. Okay, that's the tweet I sent out earlier. I said, you guys, this is deceptively strong. Talked about the 65-minute. Here's the, look at that. Look at the 65-minute MACD. Okay, good stuff. Okay, this tweet. Yeah, the bearish divergence. Okay, so right here, that tweet was sent out right here. The bearish divergence is not negated because the MACD, again, the MACD, you have to actually curl up and start making higher highs relative to previous humps. And that did not happen. The bearish divergence is still valid. Okay? Closed candles failed to close below the zero line. Oh. Okay, so yeah. So check this out. So see this? The MACD never did hit the zero line. It right here. It stopped and curled back and floated above it. It ended up going below the zero line in extended hours. Yes. But during intraday, it didn't. That further confirms the bearish divergence. When it doesn't go below the zero line, it means the bearish divergence doesn't reset. It's still valid. That's what I'm saying here. Bearish divergence is still valid because it never went below the zero line. It did in extended hours, though. But that doesn't help us because we can't trade options in extended hours. We have to trade it during intraday. I was like, ugh. Okay, that's basically all I've got for you guys today. Follow me on Twitter where I give real-time tweets. Intraday action. Don't forget to listen to your favorite music while you're trading. Helps you get in the right state of mind. Helps you get into the right flow state. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 00 signing off.